Hey everybody, now that we're early into 2025, I thought this might be a good time to take a look at some different economic metrics. Now this is not normally what I do. Usually I focus on election related data, but this is kind of the downtime for elections. And the economy is a huge topic, so I've got a variety of different data to glance at. And this should underscore where we've been and put into perspective what could be coming up. So there's a lot here. All the links will be down below in the description. We're going to start here with inflation. That's probably the biggest topic. This is updated through November, and the month-to-month inflation rate has gone up 2.7. That's higher than what it was a couple of months ago, but it's lower than what it was for most of last year. Now, this has a lot of political implications. It's one of the major reasons that Trump was able to win. It is tough for prices to actually go down, but if they're going up dramatically month after month, I think no matter how much money you're bringing in or if you happen to get a raise, just seeing that prolonged increase is going to be taken out on pretty much whoever's going to be in political power. Now, to put this last year in perspective, let's go out to 10 years. If we do that, then we can see where it really spiked. And that was just a few months after Biden got into office in 2021. It was month after month of a 5 to 9% inflation increase. It finally tapered off after a couple of years, but the damage was done. And even where we're at now, even though it's lower than before, it's still higher than what it was 5+ years ago. Now, when it comes to inflation, everybody's got their own reason as to why it actually went up so much. I'm not here to get into that. I'm sure you've got your own opinion. And you could also put this into perspective, comparing it to other countries. But again, as far as the political implications are concerned, I don't think it would matter who would be in the White House. The costs going up hit everybody, and it doesn't really matter if there are some other positive indicators outside of inflation. Now, another way you might want to glance at this is going to be the Consumer Price Index. Here's the last 5 years of data, and you can see it has gone up pretty sharply over most of the last 4 years. So obviously inflation affects everybody, but there's going to be certain specifics that might affect more people than others. Maybe the easiest one to look at is going to be food. Everybody's got to eat, so here's what we've got. This is the last 5 years. It almost looks like your classic bell curve, a clear soaring of prices in 2022 and 2023. The increases have finally leveled off, but for most people who are going to be more working class, they know down to the dollar how much their weekly grocery bill costs and how much going out to eat costs. You used to be able to grab some lunch for maybe $5 or $6, but now it's going to be 9 or 10. But aside from food, how about energy costs? There have been some declines, but again, coming out of that pandemic, there was another extended period of time where these prices were going up. Energy is the kind of thing that again has a widespread impact. And how about the other biggest driver of costs? We've got rent inflation. Here's again the last 5 years, and recently there has been some declines, but that was after another drawn out period where it went way up. So those three things I think hit people significantly. Now, there's plenty of other things, medical costs, insurance, etc. But with all these costs having gone up so much over the past few years, maybe it wouldn't matter so much if everybody's wages also went up dramatically. But that kind of thing is not going to have an even distribution. And what a lot of this has led to, which we're going to take a look at in a minute, is an increase in the debt burden. So let's move on. One other thing we could take a look at here is going to be the interest rates. Here's the 10-year rate history. We've had a couple of cuts here recently, but overall they're still relatively high. So for many people looking to do some borrowing, it's just going to be much more prohibitive to do so. But all these different metrics are a delicate balancing act. There's other things you could point to like the stock market, but a lot of people really have nothing invested. So one of the other big metrics people point out is going to be the unemployment rate. So let's take a look at that. Here it is going back to 2004. And right now it is relatively low. It's at 4.1 in November. It's ticked up slightly, but it has been pretty low ever since we got out of the pandemic. We had a gigantic brief spike before that, and then the rate is kind of where it's been at as of late. That continues a big downward trend ever since we got out of the Great Recession around 2010. The unemployment rate is always something that gets thrown around politically. Everybody wants to brag about how low it is. In this case, it's the Democrats doing so, but I know if the Republicans were in power the last few years, they would be doing the same. But as I always say, with the perception of the economy, you got to have all the metrics close to being satisfying. If you have just one that's way out of whack, that's going to change the perception of how people feel about it. There's just no other way around it. If the inflation rate was really low, but the unemployment rate was really high, I don't think people would say the economy is great either. So you got to have everything pretty much lined up. Now, everything can't be perfect, but I usually think politicians only want to talk about the economy when they want to point out metrics that are going to be in their favor, as I just said. So one of the challenges of the incoming administration is going to be to have people just feel better about the economy overall. But let's look at a few more charts here related to people's personal economies or financial situations. Here's the wage compression over the pandemic business cycle. This is 2019 to 2023. There was a tumultuous time, but here the top 0.01% actually dropped 2.2. The bottom 90% went up 5%. Then you could see all the other percentiles between 90 and 100. The reason I bring this up is the wealth inequality could become a big topic as we move forward. Because if we go down here and look at the cumulative a percent change in real annual wages by wage group. Here we've got the top 1% way above everybody else at 181%. The bottom 90% is only at about 44% in 2023. Now, if that doesn't make a lot of sense, I've got an easier to read graph right here. This is the distribution of household wealth by income group. Now, the thing to focus on here is going to be the bottom 50%. That's half the population, but the amount of wealth they have is really only a fraction compared to the higher groups. And if you go all the way to the top, we've got the top 1%. And even above that, we've got the top 0.1%. And that's only a fraction of the population, but they have by far the most wealth. Now, in some sense, it's going to be expected. There's no upper limit. The people at the top are going to have the most. I get it. But if you look at the bottom 90%, and especially the bottom 50%, it's by far the vast majority of people. They just hold way, way less of the wealth. Now, the main reason I bring this up, like I've said in some previous videos when I do any kind of commentary, there's a point where the wealth inequality can get to be so dramatic that it actually could be a problem. I don't think it would be as big of a deal if the people on the bottom did have a reasonable standard of living. But given all the issues out there with cost of living, there does seem to be an ever-widening gap of people at the top and the people at the bottom. And the main reason I mention that is because politically, that could definitely have some impacts. When that type of issue becomes front and center, usually that's when Democrats tend to do better when they focus on more populist economic issues, just providing some basic things for people at the bottom. Now, you could look at it tons of different ways. You could look at it in terms of handouts, redistribution of wealth, overall tax burdens, etc. And politically, I think there's plenty of issues, mostly cultural, that I think tend to favor the Republicans. But when it comes to a lot of, but not all of these economic issues, that's where I think the Dems could end up having an opening, but we're going to find out. Now, let's move on here. We've got outstanding credit card debt. This is in billions and seasonally adjusted. And you can see over the past few years, it has definitely gone way up. So a lot of people are just struggling to make their interest payments on this debt. And it's great if you don't have any medical debt, student loans, mortgage payments, but there's clearly a ton of people that do, and that could end up having some societal implications. Aside from personal debt, what about national debt? Well, as of September, it was 34.3 trillion, and that pretty much just seems to keep going up and up and up. That's another one of those things that varies wildly depending on who you're going to ask politically. Most people generally want to get it down, but then that's when all the fighting comes in. Are there going to be cuts, or are there going to be tax increases? And that right there is why I think everybody hates politics. There's always going to be some waste you could cut out of the budget, but who should pay more? Who should get less? What about personal responsibility? What's fair? What's not fair? That's the kind of thing that pretty much just brings the entire system to a halt. Now, honestly, the national debt is probably something most people hear about from time to time, but at the same time, it seems like a big, scary number that doesn't actually seem to have a lot of impact. So anyway, there's a lot of different economic charts out there. I even had to cut some of them out to shorten the runtime. But outside of a couple of points I wanted to make, I just wanted to present the data just to see what everybody thinks. I get burnt out and tired of hearing about people arguing about these certain stats. I always hear this stat is important, but not that one. Or this one is important, but it's skewed by this. Or that one is not important because of this situation. It just goes on and on and on. I can really understand why most people tend to tune out politics and this kind of economic data. But anyway, I'm going to leave it there for now. Hopefully everybody had a good new year. And this is a look at some of this boring economic data. So let me know in the comments. What do you think about any of these stats? Did I miss the one stat that you find to be most important? What do you think is going to happen with all this debt? And what about any of the wealth inequality? Let me know down below on your way out. Don't forget to like, share, and subscribe. Join if you'd like to support the channel. Thanks for watching, and I'll see you next time.